Good morning, ladies and gentlemen, and welcome to this live trading webinar. I hope everyone is doing great today. So let's dive into the today's currency pairs. So William and Larry, good morning, guys. Ruben, good morning. Mogil said good morning, everyone. Mr. Carlos, how are you doing? Nicholas, thanks for joining us. So pound against the US dollar, what do we see here? Price broke below this area of support as we marked it on the chart beginning of the week, and this area here is the next support we expected the price to reach eventually. Now, saying that, we don't necessarily mean price will fall in a straight line, but we expect to see some sort of pullback or correction back to an area that price finds some comfortability, and that's what we use. Maybe the 20 period moving average on the Bollinger Band, middle deviation, or some resistance can be found on a daily's highs or weekly's highs. Let's check the 4-hour chart. This move to the downside confirmed now by the RSI. Not any bullish divergence found. Maybe price will reach somewhere here before it continues. Who knows? Maybe bearish engulfing here will shoot the price lower. Now, for traders, retail traders like us, on this time frame, is not really possible using high probability setups to trade. But if we check the hourly chart or the 15-minute chart, I don't usually check the 30-minute chart, but because it's only 2 periods of the hourly chart, that's why. So if you don't check the hourly chart and you go from the 4-hour, you can easily trade the 30-minute chart. But on the hourly chart, let's say, here it's a sort of consolidation. Price, if it's going to close bearish, maybe it's going to give another shoot to the downside. There is an hourly support where we have to take it in consideration and be mindful when the price reaches this 1-hour support. Why? Because on the 1-hour support, price may create an upward move, take up stop losses, and continue to move to the downside. So when we trade on a specific time frame, we have to be mindful that if there is recent support, we have to take it in consideration. Now, why I will be very cautious around this specific support? Because on the daily chart, guys, it's been 1, 2, 3, 4, 5, 6 days without any correction. Usually an impulse move follows by a corrective move and so on and so forth. But when the move is already overextended, as you observe here, shallow pullback, boom, shallow pullback, boom. At some point, price it's gonna create a pullback somewhere around 50 or 61.8% of the fib retracement. So it's not just a fresh move outside of a higher time frame consolidation, and we can speculate on that, like, okay, maybe price it's gonna directionally move to the downside for some time, so we gonna easily surpass the support on the lower time frames. Still bearish though on the euro US dollar, of course. If you guys had the opportunity to watch yesterday's webinars between myself, Jens, and Paul, we talked about some nice stuff there. If you didn't have the opportunity, definitely it's going to be on a recording and you can listen to that. Now, we commented on the euro, especially that we all expected, based on the technical and fundamental factors, to see some more weakness on the euro. And the weekly chart shows clearly that there is a lot of room for the price to continue falling. Now, the last target I will given as a technical analyst will be this inside support on the weekly chart, and that's about 4 to 500 pips away from the current price. However, saying that, there are many obstacles along the way, like this one here. It can be used very wavy for a straight line. Yeah, this one here, it can be used for the first support. Pay attention, or even this one that match so well with pretty much the middle of this, not exactly the middle, but pretty much the middle of this long bullish candle. And as we know, the volume tends to be extremely heavy within this area. So keep an eye on that. We are still bearish on the euro. Australian dollar. Yesterday, price moved all the way, retest again the support, and now it's trader's dilemma. Edward, good morning. Raquel, Cherry, Ruben, good morning, guys. Ruben asked on the 1 hour chart, how many candles would you consider a double top or a double bottom? Great question, Ruben, and for everyone else, of course. Usually, not only on the 1 hour chart, but on the 15-minute chart, on the daily chart, on the 4 hour chart, daily chart, except the weekly chart. I will looking for about 15 to 20 candles to give a double bottom or a double top. On the daily chart, 15 to 20 candles is about 1 month, and that's the ideal. On the weekly chart, though, couple of candles are enough because they show 1 month, only 4 candles, they show 1 month duration of data. So this one here now, Australian dollar, I'm still bearish on this one, but I'm not gonna rush to sell the support, honestly. On the other hand, I'm not gonna rush to buy it either, because this move starting from here, it made a new low, so that's the high. Price needs to come and take this high to consider that market structure changed. So I'm still bearish on the Australian dollar, US dollar, but not right now to sell it. If we see price breaks and closes below the support, then we'll be much interest. It will make it a very interesting pair. Wow, look at this, guys. Daily chart, USD JPY. Let's try to zoom as much as possible. So right at this resistance, 149.6, right at the resistance, price start stalling. So let's see what's gonna happen. It's gonna be an interesting battle between buyers and sellers here. I'm interested to see what's gonna happen. For me to take a trade, because it's very tricky here, I want to see a false breakout. All right, rather than just, okay, just an inside candle. No, there are very smart traders out there, and I'm not willing to give my money just like this. Price needs to, for me at least, okay, that I want to see price move far and beyond this area, and then within the same day to move lower, or the next day, either a bullish and a bearish engulfing next day, or the same day with a gravestone or shooting star candle. Either way. Next, yesterday USD CHF, I commented for a potential bearish engulfing here. Never happened. Market now shifted into a potential uptrend because we have this higher high now on the weekly chart. That was the market structure on the weekly chart. Trust me, very hard to find good and obvious market structure on the weekly chart because it takes so long. But in this case, we see that price now makes a higher high. It has a defined lower low here, as you see from the drawing. Now higher high, so We likely gonna look for bullish instead of bearish here. Next area of resistance, we're gonna take it from the weekly chart, and a strong area of resistance, it's up here. I believe if price is gonna come here, it's gonna continue another 30 pips to give this target. So there is plenty of room for the USD CHF to the upside. Let's keep an eye on the lower time frames. Although since the 21st of September, the 20th of September, not any obvious opportunity on pretty much 4-hour or 1-hour chart. So it's not something you have to blame yourself for. Oh my God, I missed a trade. You didn't miss anything. We are retail traders. If there is not clear opportunity, regardless, we identify the direction. Everything we analyze is go based on all the forecasts, let's say, come true. But we need the way to enter the market. We need that price action to, and the market behavior to show the entry credentials that we use to enter. So far, at least from what I use from my strategies, I didn't see anything. We commented yesterday on the US dollar, Canadian dollar, that this lower low on the daily chart, but an overall higher high on the weekly chart. Maybe this is ABC pattern, retracement pattern, correction pattern on the daily chart, aligned with the weekly chart. I would like to, if I would like to trade it, I wouldn't trade it on the 1-hour chart because there is not clear structured swings. But on the 4-hour chart or 1-hour chart, I would like to find higher highs and higher lows to trade it. Now, this becomes a bit tricky. Price looks like it's still within this upward channel, and I don't know if the middle of the Bollinger Band is going to act as support in this case, and we're going to see some bullish momentum, or price wants to retrace here in a line with the lower band and act from here as bullish. The only thing I tend to, and the way I trade the markets, as you guys understand and you know so far, is on a downtrend. I prefer bearish engulfings, and I will show you numerous of bearish engulfings. This one here, this one here, this one here was bearish engulfing. This one here was bearish engulfing. This one here was, no, this one wasn't bearish engulfing. This one wasn't bearish engulfing. This one here bearish engulfing. Here bearish engulfing. Here bearish engulfing. But now we enter into a kind of uptrend. This bearish, all bearish engulfing work perfectly, but this one here, it didn't retest. When I say they work perfectly, I mean they retest the previous low. Like after this, that was the swing low. This moved to the downside. Retracement, correction, bearish engulfing, and this bearish engulfing lead price to test the most recent swing low. This bearish engulfing here didn't force price to test the most recent swing low. Therefore, looks like the market is very weak for the downside. Question from Marek. Hi Theo, based on what do you choose pair if trend is similar? For example, Euro US dollar vs Pound US dollar. I tend to pick wrong and stopped out often, although similar other pair go as planned. Okay, that's interesting question from Marek, and I'm sure that other traders, they face a similar dilemma, or they are concerned about this. US dollar is a major currency pair that there are 7 combinations with other major pairs like Pound, Euro, Aussie, Kiwi. That's 4 against the US dollar, and then USD JPY, USD CHF, USD CAD. 4 plus 3, 7. Now, there is a correlation most of the times when the Australian dollar against the US dollar, it's on a free fall. Same happened with the Kiwi against the US dollar. When the pound, it's on the rally, for example, against the US dollar, same with the euro, sometimes same with the Australian dollar, same with the Swiss franc. And then you are wondering which one of these four to choose. There are two ways to approach this. The first way is to find the credentials, like you need to understand your strategy. If you have a solid strategy and it says A, tick, B, I want to see resistance, okay, if I want to short. B, if I use Bollinger Bands, I want to see price either at the middle of the band or at the top of the band. Is price there? Tick. For example, this one here, or this one there, this one. Which one? Anyone, pick one. So, tick. Do I have room for 2 to 1? Tick. So, yeah, I take the trade. Now, if the exact similar trade appears in more than one currency pair that it has a correlation with another one, you can do either choose which one you want to trade, or you can split your, if you risk, let's say 1%, let's say you risk 2% on any given trade, you can go with 1% on the euro and 1% on the other pair. You can use that. You can trade it that way. Next one, Kiwi US dollar. Really not interested in this move here. I want to see a clear move. Price doesn't shows to the retail traders imbalance. And if we don't see imbalance, then what can we trade? Right, guys? Do you understand this? We need imbalance. As retail traders, we need to see imbalance. Traders, I see many traders out there trying to mimic and copy what the multi-billion hedge fund or high-frequency trading system will do. They try to trade same patterns, similar behavior. That's impossible. If you don't have a clear understanding of the imbalances based on, forget market structure, based on the candles, you see the candles, this candle here shows strong imbalance between buyers and sellers. It shows that the buyers are in control. So the next session we do expect to see the same, buyers to still be in control, unless this is at the resistance, which wasn't at the resistance, or anyway, we have to zoom out. But I'm sure you got the message, right? We are retail traders. We need some clarity. We can be in and out on a trade, and that's our advantage compared to hedge funds and other big corporations and big band traders. We can be in and out of a trade within a second. We decide and we close the trade, and that's it. Or we initiate a trade. But we need to pay attention to the price behavior. Gold, strong break to the downside yesterday. Now, remember, I told you that this one here was a nice setup, but reward to risk wasn't there. And that's one of my rules, reward to risk. If reward to risk is not there, why should I trade? I'm not interested to trade. I might trade just to satisfy it. And think about what I'm going to say now. Am I looking to trade something just to satisfy my boredness, or if I feel excitement, I will take a trade? No, I trade because I want a dollar outcome out of the trade. So you see, I'm very picky with price action trading, and also it's not enough. It needs to have room for to make at least double the money that we risk. And in this case, price moved far and beyond. That's okay, totally fine. Broke below this area here, so we go on the weekly chart now and we rearrange the lines. So obvious area of support is this one here. Market hasn't break this yet, but the next area of support is down there. There is a slight gap left up to here, but if it's going to be a false break on the weekly, we will see it by the end of this week. Back to the daily chart. Definitely it's a market we will keep an eye on, and for our chart, see guys, consolidation, very narrow consolidation on the 4-hour chart. That's a crystal clear example of what price might want to do afterwards. Okay, pound JPY, I'm still waiting for a bearish breakout here. It's likely to happen today, and then I will be looking forward to trade to the downside. Now many traders, they ask, why do you believe that it's going to be a bearish breakout? For many reasons. Look at the charts. Weekly higher high, barely it closed higher. I mean barely it closed higher than this high. After this bullish candle on the daily on the weekly chart, market didn't follow through, which was the case, and it's supposed to happen. Multiple rejections on the 10 period weekly moving average, and price didn't shoot upward, and bearish divergence on the RSI on the weekly chart. Multiple rejections. Yes, I do expect deep retracement. So but there is saying that there is an obstacle in between. I can rush to trade from here, yes, but where is the stop loss? No price action, bearish engulfing, or shooting star, or gravestone doji to give us let's say a false break to the upside and to use the high for stop loss. That's why I want to wait for a breakout. On the 4-hour chart though, no price action to use it. On the 1-hour chart, yes, we can find price actions here, many, but if the 4-hour chart, it doesn't have, you see there is no sequence here, and the price trades between this sideways move, and yeah, I'm not interested to do it. If we're gonna break below this low here, if price breaks below this low here, high chances is to see a nice solid move to the downside. We jumped on the lower time frames and we try to apply our strategies. Okay, I'm saying we try to apply our strategies. Doesn't mean the market is going to give us what we want. Question from Sigurd. Hello Theo, can you take a look at FTSE please? Definitely. Euro, again, expected to break below this area and then nice solid move to the downside. FTSE 100 weekly chart, high here, and there is an obvious low there, but prior to that there is a low here that market can test it. So it's within this long-term consolidation, and ideally we sell support and we buy resistance with price action. But right here, to identify this trend with market to be so messy, I wouldn't pick up a trend. Maybe for a high frequency trading algo or for a multi-billion dollar management hedge fund, maybe this is a trend, but for a retail trader, market is not clear. Okay guys, and why for those big traders this maybe it's an uptrend? Because these are the guys who create the trends. But what we see here, the development of this maybe potential uptrend, is within a statistically low probability pattern. Ruben, thanks. London Open, thanks for the reminder. So DAX, DAX, an hourly chart, it moves lower. 4-hour chart though, we are in a downtrend. Market is in a downtrend. Hourly candle. So let's go on the 5-minute chart. Alrighty, so that's when things they become a bit tricky. Price broke below the low of this previous hourly candle. So in this one here, guys, that's the 1-minute chart. Couple of minutes for the London Open. I'm on the 1-minute chart now for a reason, to see some bullish candles. Even one bullish candle will be enough, ideally two, and we're going to take the swing of this 1-minute chart, because the 5-minute chart, it has to be market execution. If you guys believe that this is a bearish signal, you have to go with a market execution. Okay, instantly sell the market. Now I wouldn't be using this as a high, for the reason that I will be using this as a high because that's a previous hour's high. So buy stop here. If price moves higher, I would like to get filled, and that's very tricky. I will go for 15 pips, but with no swing, it's very hard to take this trade. If you believe that, again, this is gonna continue to the downside like that, you can press the sell right at the London Open. So, but for a stop orders, here it's a buy stop order I placed above this candle high. Ideally, I would like to sell at the market, but okay, yep. If you guys sold it here, more than 10 pips so far. And that's what we actually wanted to do, right? We wanted to be, look at the 1-hour chart. We wanted to be sellers. Look at the 4-hour chart. We wanted to sell, but to sell with a swing like we do on the live sessions, and that's much more helpful for us, the retail traders. Let's see how this 5-minute candle will close. So I have a buy stop order here. I didn't manage to place a sell stop because of the market structure. And again, it's not what we want to do, it's what the market shows. And if what we want to do is in line with the market structure, then and only then we take the trade. Johan asks, please look at the euro against the Great British Pound. Yes, we can do that. Euro against the Great British Pound, weekly chart, strong resistance, guys. Commented from the beginning of the week. Nice bearish engulf, no, sorry, not bearish engulfing, but very close. Yesterday, remember I told you to keep an eye on the price action around this resistance, because first, our strategy, first, weekly or daily, ideally weekly, strong resistance, tick. Second, strong price action, bearish engulfing at resistance, yes, here. Third, Do we have a bearish divergence as well that they indicate? Bearish divergence indicates that there is an exhaustion of this last impulse move, and the market maybe it's not going to be able, high chances is the market is not going to be able to sustain this buying pressure, and maybe it's going to collapse. So bearish divergence, absolutely. Do we have a double top or higher high with a bearish divergence? Yes, we have a double top. Okay, so we can take the trade. We enter, stop loss somewhere here above the most recent highs, and we go for 2 to 1, 3 to 1, whatever we prefer. So that was an exceptional trading setup, and we talked about that yesterday. But the thing with the 4-hour chart, to be consistent, you pretty much have to put the time and be in front of the charts and be specific. You look for this, you have your checklist, you have your plan, you have 2, 3, not 2, 3 or 4, at least 3 to 4 confluences. You want them to be there at the same time, and then you take the trade. Mladen asked, did you want to put sell stop at 15 to 1 find approximately at the level of last resistance on 5-minute chart? Sell stop, you mean at the level of support? Let me go back to check. 1.5 to 1.15. That's a great question actually. To place a sell stop below this low here, no, I wouldn't do that, because this is based on what we trade here. This is a very okay, that's not a very, but that's an old resistance, old support down here. I want to take the breakout of the previous, of the most recent hourly or 30-minute candle to the downside. See guys, what I explained you about the intraday, the hourly support, or even any intraday. So because the market is not in a fresh like this one here, in a fresh strong directional move, and pretty much there is a balance between buyers and sellers, an intraday support has to be taken in consideration, because if you expected a break below this support and you didn't close your trade in a market that doesn't have imbalance between the buyers and sellers, then it's very low probability that over 100 trades you replicate the same behavior, the same strategy, and you're gonna have a good outcome. But it's not like in this case. That was a strong directional move. So if we initiate trades here on the 5-minute chart or somewhere there, we would have expected a break below, because it was a strong imbalance between the sellers and the buyers. And clearly sellers show that they dominate the market. Zarabayat, could you see DAX 1510 today? Absolutely, I can see DAX to even to 15, but today, based on the daily chart, I will expect to see some more fluctuation and then some correction, to be honest. That's what I think I see on the chart. Yeah, the fact that yesterday this strong bullish candle on the 4-hour chart didn't manage to create a correction and retest this inside resistance on the daily chart, it's a strong indication that buyers are not that strong and there is more selling pressure in the market. Good, still trading lower on the 5-minute chart, but yeah, market eventually will overcome this support here. All right, guys, I think that's all from me today. I don't see any questions here. I think we answered all the questions. If you find some value on these webinars, please make sure you like the videos. That will be much appreciated. You can, if you are new here, you can also subscribe to the YouTube channel. Would like to say a very big thank you to everyone. Hope you enjoy this trading session today. Happy trading, guys. By the way, if you are still on this buy stop order, 3 candles, that's 1 second. The third one, 10:15. If it's not going to get triggered, I will cancel the order. All right, so please be mindful to, if you believe that also what you want to do in the next 3 candles, to cancel the order. So have a great day, and I look forward to see you tomorrow at the same time. Thank you, guys.